Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today, we're cracking open NewLake Capital Partners' latest 10K. It's an annual report, so get ready for a year in review of a company that's in a business that's still federally illegal. Should be fun. NewLake Capital Partners, they're a real estate investment trust, or REIT, which basically means they own a bunch of properties and get income from rent. But here's the twist: they focus on the cannabis industry. They lease out cultivation centers and dispensaries to cannabis operators. As of the end of 2024, they had 32 properties across 12 states with big names like Curelaf, Cresco Labs, and Trulieve as their tenants. Now, the cannabis industry is booming, right? NewLake estimates legal sales in the US hit almost $30 billion in 2023, and that number is expected to reach almost $50 billion in just a few years. But because of federal regulations, cannabis companies often struggle to get traditional funding. That's where NewLake comes in, providing them with real estate capital through sale-leaseback deals and other arrangements. Alright, let's dive into some key numbers. Rental income, which is their bread and butter, totaled almost $50 million for 2024, and cultivation facilities accounted for over 90% of that. Think about that, dispensaries bring in less revenue for them. Sounds like growing it is where it's at for NewLake. Of course, it's not all smooth sailing. This report does come with a warning, which we will talk about in a bit. There are some risks to consider. The biggest one, cannabis is still illegal at the federal level, and that creates all sorts of uncertainty for NewLake and its tenants. They also face competition from other investors, and those pesky interest rates could go up, impacting their bottom line. So what's NewLake's strategy for dealing with all this? They're focused on diversifying their portfolio, carefully vetting their tenants, and actively managing their properties. They're also keeping a close eye on what's happening in Washington, D.C., particularly when it comes to potential changes in federal cannabis laws. One thing they are closely watching is President Trump's view on the rescheduling of cannabis. If the federal government reclassifies cannabis, it could have a huge impact on the industry, potentially making it easier for companies to access traditional banking services and reducing their tax burden. Another thing they are keeping their eyes on is the Safe Banking Act. What that law would do is protect financial institutions that work with cannabis businesses from federal penalties, opening up access to banking services for their tenants. Now let's take a quick detour into something completely different, something companies call human capital resources. In short, NewLake has a small team of only 8 employees. They seem to value them, offering comprehensive health insurance and a generous amount of paid time off. You know how important a healthy and happy team is. Back to the risks. One thing I found interesting is that many clearing firms, which are the guys who handle the behind-the-scenes stuff for stock trades, won't work with companies in the cannabis industry. This could make it harder for NewLake to raise money in the capital markets. Tenant concentration is another risk. As of December 2024, they only have 13 tenants, with one tenant, Curelaf, accounting for nearly 23% of their rental revenue. If any of those big tenants runs into trouble, it could really hurt NewLake. Their properties are also geographically concentrated, with a large chunk of their revenue coming from just a few states. So any social, political, or economic upheaval in those states could have a major impact. The concentration is in cultivation and dispensary properties, which means if the popularity of it falls, they don't have other facilities to turn to. And because cannabis is still illegal under federal law, their tenants might have a hard time accessing bankruptcy courts if they run into financial trouble, adding another layer of risk for NewLake. Like any REIT, NewLake relies on external funding to grow. But because they're in the cannabis industry, it might be harder for them to get those funds on favorable terms or at all. They also have a revolving credit facility, which is basically like a credit card for companies. The success of NewLake depends heavily on its management team. If any of those key people were to leave, it could have a negative impact on the company. The market price of NewLake's stock can be volatile. A bunch of factors could influence the value of its stock, including their financial performance and any news or reports about the cannabis industry. As a REIT, NewLake is required to distribute a large portion of its taxable income to shareholders. If they don't, there are penalties. There is a risk that they may be forced to not expand in order to pay dividends. As with any company these days, cybersecurity is a concern. A successful cyber attack could disrupt NewLake's operations, compromise confidential information, and damage their reputation. To combat these risks, NewLake uses a bunch of things like risk assessments, and they train their employees to keep cybersecurity risks in mind, using the principles from the National Institute Cybersecurity Framework, or NIST-CSF. They even employ outside parties to double-check everything. And it's their CEO, Anthony Caniglio, that oversees the system. He is experienced with these matters and is also a member of an IT committee. Alright, let's switch gears and take a closer look at those properties. Most of their rental income comes from very few tenants and a few states. Their leases have pretty long terms, though, which is good. They calculate their annualized base rent and the average per square foot to see how much money each site brings. Good for them. They have some improvement commitments they will need to fund in the future as well. The biggest theme, again, comes down to the legal challenges that are in this business, which could cost money and change the nature of the product. They have preferred stock they may issue, which might dilute the worth of their normal stock, but that is a risk all companies have, so it is normal here. They are working hard to avoid being labeled an investment company to avoid costly regulations. And finally, it looks like their auditor has switched. This section has the consent of the previous one, but be aware that it happened. Now, what's the overall take on NewLake Capital Partners? They're operating in a high-growth industry with unique challenges. The company's got a clear strategy, they are sticking with it, trying to make a profit and expand cautiously, but their portfolio is heavily concentrated, and their success depends on a lot of things outside of their control, especially the legal and political landscape. Their debt appears low, but with higher rates and a few tenants struggling to make rent, this company is going to need to continue to be cautious. There is still plenty of uncertainty here due to the legal nature of their business. With higher debt, and if they are forced to raise money, I think that number will be lower. I see a price target of $15. Thanks for watching. If you enjoyed this deep dive, give us a like, leave a comment, and subscribe for more Corporate Decoder. Until next time,